So hello traders, it's Forex Evangelist right here. So in today's video, I want to share with you guys, the step-by-step process of how I entered a trade on GBPCHF, because a lot of traders has been asking me, what you just post is fundamental. You don't post the chart and you don't share any form of technical analysis, or how do we even understand that you're actually making sense in what you're actually doing. So I decided to share with you guys. So I just took a quick scalp. I just decided to, okay, let me just record through the process and share with you guys. If you're on my TikTok page, you can see I usually share some since I have gotten very consistent with posting on TikTok. You could see sometimes I share before of every currency or any instrument, financial instrument I want to trade. So this GBP Swiss franc, you can see that just a quick scalp. So I will take you step by step, starting from fundamentals, sentiment, macro data and everything, geopolitics down to technicals, and I will share with you. You will see, how even technically how professional traders from institutional trading floors actually do this, aligning everything together, and you will see if this is actually what you need, or if this is how you have been taking the forex market. Forex market is a business and you need to treat it as such. So please stay right to the end of this video, so you're actually going to be learning a lot. Believe me, it's going to marvel you, it's going to blow your mind. So let's start with macroeconomics or macro data. For let me use the word fundamental analysis, as most retail traders are used to, because many traders today are not coming from finance background, and it's not a must you need to come from finance background before you are going to understand how the forex market works. You don't need to. You just need to understand the basics, and that is what I want to share with you guys here. So if you look at what I have here on data, you will see that GBP is ranking as the best performing currency. As you can see, Euro, JPY, Swiss franc are ranking as the worst performing currency. And you can see how I combine everything. These are some of the tools we use on our institutional trading desk. You can see how we combine everything. We do a fundamental analysis of every economy, and every single day we come combining with artificial intelligence. These are proprietary trading materials we use, combined with proprietary materials we have on our trading floor here, and it gives us even a clue, combining geopolitics, what is happening around the world, big banks and institutions, and economic sentiment, and using that to understand currencies, to take advantage of every single week, every single day, every single month. Very simple. It's something everybody needs to understand, and everything is just based on data, and you can see it here. And for what you can see, it's showing me that my most vulnerable currencies are Swiss franc, JPY, and the euro. And my most resilient currencies or strong currencies are Canadian dollar and GBP. Okay, not just because they are the strongest in terms of my economic data, my analysis of the different economies, but it also gave me some tips, based on its sources from internet, and some other APIs referred on our Excel sheet. So telling us that based on the energy security which is happening in the Middle East, we can see that the Houthis in Yemen are even trying to close the Bab El Mandeb Straits, another important route of energy prices, that connects some parts of Africa with Saudi Arabia. So that Bab El Mandeb Strait, the Houthis are trying to attack that in support of Iran. And trade fragmentation, we could see Trump making a comeback again with what is happening with his tariffs. So you could see here on Reuters, you can see Trump imposes forced labor duties on 60 trading partners. So you could see even trade is also affecting what currencies, and GBP, there's nothing much that in terms of the tariff that has to do with GBP, not much affected in terms of the economic impact with what I was reading earlier this morning, and inflation persistence. So you could see some of those things. Now when we go to sentiment to see what actually big banks and institutions are doing, from last week we could see we are coming from negative 0.52. You could see GBP Swiss franc there, you can see negative 0.52, and now we are positive 25. So that tells me what big bank and institutions are most likely going to be doing this week, while I was coming into the new week, in terms of their sentiments and data. Okay, so that's it. So all these things are proprietary or institutional materials we use, at Bullish Trend Forex Academy, our trading flow, and I use personally to take my trades, and I'm showing you guys the step-by-step process of how every retail trader out there should be doing the same. So why did I take this short-term buy and close it exactly at that point, like I showed you guys on my MT5? Okay, why did I enter at that point and exit at that? Everything is based on data and information, and let's go. Okay, so now looking at this now, technically we have discussed what most retail traders don't want to hear, don't want to listen. We have discussed fundamentals, macro, sentiment, and everything. But let's come to what a lot of retail traders are in love with, which is technicals. Very good. You cannot be a successful trader without having a sound technical concept. All right, but you can't also be a successful trader, in my own opinion. Forgive me if you don't buy into my idea. If you don't understand fundamental analysis, if you have to tell yourself the truth, okay, you're going to find it difficult in most cases. You're going to struggle, and sometimes you can give back your gains, and it's very, very painful, losing money over something everybody in the world should be aware of. That is not even a secret. Okay, so coming to the chart, technically here we got a push to the downside, all right, which is an impulse. Okay, the way I see impulse and corrections are quite different from how a lot of traders see impulse and correction. Now, just to go with that, here is an impulse, but came in the form of a 5-wave structure. Okay, if I go down to, let's say, the 15 minutes time frame to explain in details, that particular impulse, this one that happened here. Okay, so this here is an impulse, a correction that came in a 5-wave structure. Let me try to expand and show you guys what that simply means. All right, so here we got a 3-wave structure. Corrections are minimum 3-wave structure. And the way I look at wave analysis concept, which is for me the most purest form of understanding market structure, is that there's a principle that says for every up move, there's always going to be another up move, and for every down move, there's always going to be another down move. That is the order matching process of how price move. Okay, and that tells you what price is most likely going to do next. Technically speaking. Okay, so here, for this down move, we got this down move. Okay, you can see I told you corrections are minimum 3-wave structure. 1, 2, 3. We are heading up again. Correction 1. For this downside, we got this downside. What is happening? Corrections are slow and messy on minimum 3 waves. All together, you can see 1, 2, 3. The correction is done, and now the last move. So here, from here to here is 1, 2, 3, 4, 5. I'm counting, I'm not labeling, for those who may understand a bit of wave theory. Okay, so now moving on, here we got a corrective structure after this impulse, because for this downside we got this down, and I will tell you the reason why I was looking at a potential buying opportunity from here, from this 1.08646 level, and I'm going to show you that statistically, it's a very basic something of how it's been done on the institutional trading floors. All right, so here, and these are some of our findings. Okay, here you can see an impulse, you can see a correction 1, 2, 3, minimum 3 waves. We continue the up move again, 1, 2, 3. For this downward, the minimum 3 waves is a 5-wave structure, and we also know how we calculate momentum and know when price is actually coming to an end, when expecting reversals, not just with the MACD as you can see here, but also with basic calculation concept we have, which is some of the things we use on our trading floor and proprietary desk to get this level. So here is technically a 5-wave structure: impulse, correction, impulse, correction, impulse. So now for this down move, now we have gotten this down move. So all together on a bigger degree, this is impulse, correction, impulse. Now simply means for this up move here, we're anticipating an up move, and that is the reason I bought. And remember I told you, because wave analysis makes me to understand that for every up move there's going to be another up move, and for every down move there's going to be another down move. Now before I come to the reason why this level was an important level, and you can see the massive big candles on the 5 minute time frame, showing me that is that before I don't even need to go to the other flow footprint chart, but that tells me that it's an evidence of institutional activity, that somebody with massive pockets is interested in that level. Okay, it shows me evidence of institutional presence and activity. How price immediately rejected and reacted from there, it means somebody is defending that level. Okay, but before then, you can see here for this downside here, after this up move, we got downside. You can see very slow and messy move downside. That is 1, 2, 3, the entire correction, and this is exactly where I begin to buy. So if you look at it, so you can see that as well. You can see that was where I now begin to take the buy setup. So let's come to this level. Why I took a buying opportunity around that level. So statistically here, if what we got here, I'm on the 1 hour time frame now, is impulse correction, impulse correction, impulse. How I got here is statistically working on this second impulse to know where this is most likely going to end, and from there watch evidence of institutional activity if institutions are probably going to step in. Okay, so there now, if I just take you to my calculator, I basically use scientific calculator for this. Is my most preferred calculator. So now I walk you through the calculation. These are some of the things I should not be sharing this, but just for the purpose of some people who are who I see on comments, basically on the YouTube and other platforms, saying that we don't share chart analysis and all of that. So this is scientific calculator now. So what I do is I get the high of that move. So that high, which is, let me do that, 1.09008 plus the low of the move, which is 1.08695. So you can see me run my own calculation here, plus the close of that same move, which is 1.08779. So I equal everything and divide it by 3. And it gives me 1.08827. So what I do next is open brackets 1.08827 multiplied by 2, close brackets, minus the high. Okay, just very basic things that we use on our trading floor. 1.09008 equal to, which gave us 1.08646. So look at the level 1.08646, and you could see. So when I drop that line there, so because some traders use their supply, their demand zone to market levels, you can always also add it in confluence with it. But you could see at that level, I knew that technical structure was complete. Okay, so I'm now looking at the location, the level where I could see evidence of institutional activity. So immediately market reacted there. If I go down to 5 minutes time frame, I waited for the impulse, which I'm looking for evidence of institutional activity. The intent after that, I waited for a clear correction, and then I bought. And why did I leave there? Because trading is not just understanding where to enter, but also when to leave. Okay, because I knew that this was the last impulse, because for this up move is why we are going for this up. So price can decide to give us one more further up move. That is fine, but I know already, structurally speaking or technically speaking, once this high is taken out, structure for me is completed. Anything that goes above that is extra. So because this impulse is what needs to be taken out for structure to be completed, not this high, because this is impulse here. Those who understand wave theory is what we call running flat. Okay, this impulse, this high is what is meant to be taken out, and we have rated that high, and that was why I was out. Okay, you can see how price is reacting at this point. So that is it. That was just the step-by-step process, just to show us how you can actually combine fundamental analysis and technical analysis, so you can see the step-by-step guide of how you can actually do that. And trade with the right information, because information in the forex market removes fear. You understand the reason why price is moving, not just because you saw a bullish candle, but you don't know if actually that has institutional support or market participant support. So not that you cannot lose, but you can see you win more than you lose. Okay, so you could see how you can support any decision you make in the forex market with data, with reason, solid reason behind why you are buying or selling a particular instrument. So I know you've learned a lot from this video, so don't forget to click a like, share this video to other traders to see, follow, subscribe if you are watching on YouTube. So thank you very much, and see you soon. Okay, bye for now.